In this short video, I'm going to explain how to use Call the Underwriter to have your seller finance loans professionally underwritten. So step one is you're going to want to pre-screen your borrower. There's a checklist on our website, and this just means having a short conversation with your borrower that you complete prior to putting the agreement under contract, that you just want to determine things like what kind of income do they have, where does it come from, what type, how much income, do they have other debts, or are there any red flags potentially on their credit, such as recent bankruptcies or foreclosures that could disqualify the borrower? Most of the times, 95% of the time plus, you can determine if a borrower is going to be unqualified during this step, and that will save you a lot of trouble and money and time so that you're not going down the road underwriting a borrower that's ultimately not going to be able to qualify for your loan. Next, you're going to go to our website and submit a term sheet. The term sheet form is going to have things like your contact information, contact info for the borrower, the subject property address, and then the loan terms and sale terms you've negotiated with your buyer, as well as any fees that you want us to include on the closing statement. You'll also have the opportunity to upload the sales contract or other documents you want to provide us. We recommend submitting the term sheet about 2 weeks before you plan on closing the loan. And the reason for that is there are some required disclosures that I'll explain in a minute that legally have to go to the borrower 7 business days before you close. So when you consider the 7 business day timeline there, plus time for the borrower to get their information in and time for us to do the underwriting and everything to be finalized, we recommend about 2 weeks. And then after the term sheet's been submitted, you'll receive an email back with instructions that you can pass on to your borrower. You'll also receive the initial invoice for the underwriting fee. Now, because Call the Underwriter works on behalf of lenders, unlike some traditional mortgage brokers or other institutions that work on behalf of consumers, we can't legally send invoices to consumers. We have to be paid directly by the lender. Now, what most of our lenders do is they can recoup the underwriting fee from their borrower at the time of closing, but they initially need to pay it to us. And then the third step is once you get that email from us, ask your borrower to send all the information that we requested. There are three main forms that the borrower needs to fill out. One is the authorization to allow us to pull credit. The second is the actual loan application. And then the third is the form for them to upload their income documentation to us. At that point, we'll start underwriting the file. Once we have everything from the borrower and we have received payment for the first invoice. Now, the way our underwriting process works is there's a number of things we do as we go through your file. Number one, we're going to verify what the borrower's monthly income actually is based on all the data that they've provided for us. And if a borrower is self-employed and maybe they had to provide 12 bank statements, it's not always as straightforward as a straight W-2 income. Then we'll pull their credit. We'll look at other debts that they may have that affect their monthly expenses, and then their credit score and overall credit worthiness. We'll calculate their debt to income ratio based on the monthly payment for the new loan they're taking out for you, as well as any other debts they may be servicing. Then we'll also look at their residual income. There are some scenarios where a borrower has a low level of income, but because the monthly payment on the loan is small, they have a satisfactory debt to income ratio. But with residual income, we're looking to make sure that they have enough money left over after that to live based on the region that they live in and the number of people in their household. Then we'll determine overall if they can afford the loan and if the new loan is going to be Dodd-Frank compliant. And then the other thing we do that's also extremely important to investors is give a determination of the overall risk level of the loan that you're creating. This is really important to you so that you understand the loan you're going to be holding going forward, or if you plan on reselling a loan at some point, it's going to make your loan much more valuable to a potential investor interested in buying it. Once we're through the underwriting process, we're ready to send out the loan estimate and loan conditions. The loan estimate is a required disclosure under TRID. That's a disclosure that needs to go out to your borrower 7 business days before you close. And the purpose behind that rule is to give the borrower ample time to review all the fine print and all the detail. Now, if there are maybe some issues in the borrower's file where it might not be Dodd-Frank compliant as is, then we'll also send out a list of loan conditions, which is things that borrowers can do to clean up those potential issues. So, for example, if the borrower has a low credit score, they may be able to mitigate that by supplying a verification of rent letter. Sometimes we're missing information and we just need to get the borrower to fill in that other information that we don't have. Or if the borrower has accounts that are delinquent or in collections, we may ask that the borrower bring those accounts current or get a payment plan in place. Now, when we get to this stage, there's really three different scenarios we commonly see. One is if the borrower just flat out isn't going to qualify, or there are going to be so many conditions that they would have to satisfy that it's not really reasonable. In that case, before sending out the final invoice and sending out the loan estimate, we'll just ping you and give you a heads up, explain the scenario, and get feedback from you on how you want to proceed. That saves you from getting that final invoice if it's a borrower that you're just not going to be able to move forward for. More commonly, we'll send out the loan estimate with any applicable conditions. Now, you'll want to have the borrower clear those conditions before you close, but that doesn't stop us from sending out the loan estimate. Or sometimes the borrower just qualifies straight out without any conditions, in which case we just send the loan estimate and the invoice. Now, this step is very important. Once you receive that loan estimate, both you and your borrower want to go through there and review it and see if any changes are needed. Sometimes fees or other things change between when a lender submitted the term sheet and when they get to the loan estimate changed. So if needed, we'll make any necessary corrections and send out the final loan estimate. The next step in the process and the next required disclosure is the closing estimate. So the closing estimate needs to be received by the borrower 3 business days before closing. And then once all the required disclosures have come out, we've determined that the borrower is Dodd-Frank compliant, we'll deliver you with the final underwriting package. This is going to be a file with all the data we've collected, the application, the income documentation, any other information we've picked up, along with the 1008, which is the official underwriting form. That's going to have the underwriting notes, uh, document the debt to income ratio, the credit score, and some other things. And then if applicable, we'll also provide you with a statement on Dodd-Frank compliance. At that point, you're clear to close and move along with your loan. So that's how working with Call the Underwriter works. If you have additional questions, feel free to reach out to us using the contact form on the website, or you can email us directly at team@calltheunderwriter.com.